In his book Beyond Candlesticks, Steve Nisson describes a curious phenomenon: bursts of extreme volatility on a chart that, when interpreted correctly, don't just show price movement. They reveal hidden zones of power, zones where support and resistance aren't just guessed, they're felt. Traders have tried to bottle this magic for years, building tools that promise to capture it, but none quite nailed it until now. Today, we're going to show you an indicator born from that very concept, refined, modernized, and designed to lock onto those same volatility spikes Nissan first spotlighted. Let's dive in. First, let's clarify what high volatility actually means and how we can spot it. Volatility in trading can be measured in a number of ways, but one of the most widely used methods is the average true range, or ATR. By taking a handful of those candles, applying some basic math, we can calculate the average range, what we consider normal volatility. So, when a candle suddenly breaks above this average range, it's not just noise, it's a signal. That spike tells us volatility has surged, and that is how we identify a high volatility event. This indicator zeroes in on those rare high volatility candles. Bullish spikes are highlighted in dark green, while bearish ones appear in dark red. But it doesn't stop there. The indicator also marks the midpoint by default of each high volatility candle, automatically drawing horizontal levels that act as potential support or resistance zones. Zoom in on those levels and you'll spot something subtle but powerful. Small circles that occasionally appear when price taps into a zone but doesn't close beyond it. This wick rejection is a key signal. It suggests the level is holding, and it's often the perfect moment to consider a trade. Now, if you open up the indicator's settings, you'll find some interesting customization options, starting with the ability to switch between historical and trailing display modes. In historical mode, which you've seen so far, the indicator draws a separate line from every high volatility candle. Each time price retests one of these levels, it marks the interaction with a dot. This mode gives you a detailed history of how price has respected or rejected past volatility zones. Trailing mode, on the other hand, works differently. When a new high volatility candle of the same type appears, and the previous level hasn't been broken, the line updates to reflect the most recent candle's values. This creates a dynamic, trailing level that adapts in real time while keeping your chart cleaner. We also wanted to give you flexibility in how support and resistance levels are drawn, because different traders prefer different reference points. With the percentage setting, you can define exactly which part of the candle is used. Setting it to 100% will anchor the levels to the candle's close, while 0% uses the open. You can fine-tune anywhere in between, depending on how you interpret candle behavior. Just below that, you'll find filter settings that let you adjust the sensitivity of the volatility detection. This is where you can tweak the ATR multiplier and other parameters to better match the dynamics of your specific market or trading style. And finally, the style options give you control over how the indicator displays, like adjusting the colors of bullish and bearish volatility candles to fit your chart aesthetic. And that covers all the settings available within the indicator. Now, let's shift from theory to practice and see how this tool performs in real market conditions. Now, you can absolutely experiment with this indicator and develop your own strategy. But based on our testing, here's what we've found to be a reliable approach when tracking trades. The first thing we look for is confirmation that the level, created by a high volatility candle, is actually acting as support or resistance. In this example, we have a bullish volatility candle, and what we want to see are at least 3 interactions with that level. In other words, 3 rejection dots. That tells us price is respecting that zone, but we're not jumping in just yet. On that 4th touch, we want more than just a reaction. We want a high volatility candle to either break or bounce off the level. This signals that volume and momentum are backing the move. After that, we wait for price to return and interact with the newly established resistance, rejecting it in the same direction as the breakout. That's our trigger. From there, we place our stop just above one of the volatile candles and target a clean 1 to 2 risk-to-reward setup. In some setups, these high volatility candles can serve as direct entry triggers for your trades. You can use the accompanying support or resistance line as your stop-loss level, and another volatility zone as your target. In this example, we've set the support and resistance levels to 0%, so they're drawn from the open of the candle, giving us a precise baseline. We're also using the NeoCloud from the Signals and Overlays toolkit to confirm our directional bias. When it's blue, we're only looking for long setups. When it turns red, we're hunting for shorts. In this case, the cloud is red, so we're focusing on short opportunities. What we want to see is a volatility spike, a candle that aggressively rejects the NeoCloud resistance. That's our entry. From there, we place our stop above the resistance line drawn by the volatile candle, and we set our target at a lower support zone formed by another high volatility event. And that wraps up our breakdown of the candle body support and resistance indicator, an intuitive way to pinpoint explosive price moments and uncover hidden support and resistance zones with precision. You can start using it right now, completely free, at luxalgo.com/library. And if you want to take your trading confidence to the next level, Don't forget about the signals and overlays toolkit we used alongside it. Tools like the NeoCloud give you that extra layer of directional clarity, helping you filter noise and lock in on high-probability setups. You can try it out risk-free for 30 days at LuxAlgo.com. Thanks for tuning in. Trade with intention, manage your risk, and we'll see you in the next one.